All right. Good Monday, everyone. So I'm not sure if anyone's watching from the US. I think it's still evening on that area. And actually, currently it's morning in my place, in my time zone right now. But good to see a good new week for this Monday, I think. So, good morning, good afternoon, or good evening for anyone's watching for today's webinar. And I'm excited to check out the charts for today. And let's see what's gonna happen for the coming days. And as we expect a lot of red folders for the coming days. But before we proceed, just to read through our disclaimer. So before anything else, I highly suggest that you'd take everything with a grain of salt because not everything that I will say is a financial advice. So I suggest you check out first the markets that you're gonna trade. Before you decide to trade foreign exchange or any markets, I highly encourage you to consider your objectives on an investment standpoint, and most especially how you would handle risk. And based on your trading experience, um, just take everything with a grain of salt. So yeah, I think let's proceed with the charts. And primarily, we're gonna discuss or analyze more about the US dollar because the US dollar has a high impact on how the other markets will move in the coming days and especially in the coming weeks. So, looking at the dollar right now, we're not seeing any signs of a complete upside reversal. So, yes, we have seen the dollar going on an upside for since April 29, Tuesday last week. And we're seeing a continuous move to the upside. Actually, last Friday, after the NFP print was released with a um, positive numbers in relevance or versus to the previous and the forecast. So right now, what we're seeing with the dollar, what happened with the dollar last week, we actually also looking at the FOMC that's gonna happen. Also looking at the FOMC that's gonna happen or the Fed rates that's gonna happen on um, let's see on Thursday. So let me just pull up my CME Fed Watch tool for you to understand what I'm saying. So on Thursday, this coming Thursday, we're actually expecting a rate pause. So the Fed rates are expected to hold rates this week, maintaining a neutral stance despite the pressures from Trump. So overall, we have a 96.2% of a pause from 4.25 to 50. But let's see in June or next month what will be the expected rate decision. But if we're gonna look at June, um, actually the pause is still on the table with a 64.5%, and a rate cut is still not yet seen in the horizon in the coming month. But let's look at July, what will happen. So on July, the numbers are actually bumping up for a rate cut of 25 basis points. So on July, if we see that, or maybe on June, these numbers would increase, we might see further, weakness on the dollar side. So this is actually what Trump is looking at. He's looking at more rate cuts for the Fed, but actually right now, though Trump already ruled out firing Powell, but still, the pressure on the Fed is still there since Trump really wants to fast pace the rate cuts in the coming months. So, also, the reasons for why the Fed is holding rates is this is just based on the recent FOMC meeting. So, if you're gonna look at the previous FOMC data or maybe the PDF, you can actually go to their website and just check out the PDFs that they have there, and it's available in the public. You can actually read those files just for you to understand why the Fed is holding rates. So right now we have a sticky services inflation. Well, while the good prices have eased, still the inflation in housing, healthcare, services remains elevated. Of course, it keeps the Fed cautious in the markets. At the same time, we also have a strong labor market. Despite the inflation is still on a risky side, the labor market is still proven or still showing signs of strength. So we have a low unemployment and a steady job growth, suggesting that the economy can handle current rates without immediate easing. So the Feds are seeing right now is they still not seeing any signs of urgency to cut rates. Yeah, well, we don't know what will happen in July, but that's what they are seeing right now. So another thing is, of course, the tariffs are um, wreaking havoc in the global scale. So the global tensions give the Fed reasons to stay flexible without committing to cuts or hikes. And yeah, well, despite the rate pause and the Fed not pushing for a rate cut yet, Trump is still ruling out the talks about firing Powell. Maybe because it's not yet the best interest of the U.S. to do drastic decisions about the Fed's decision. And at the same time, it would be questionable for the White House or for the US government to stick their fingers in the Federal Reserve, which we see as an independent entity, managing risks, managing the rates. If the US government tries to stick their hands on that environment, maybe that would not be beneficial for investors. It would raise eyebrows, maybe, on the investors, on the traders who are watching the markets. So, another thing that we need to look at is the current developments with what's happening with China. So right now, what the China also is also showing willingness to have talks with the U.S. And the U.S. actually already eliminated the de minimis exemption for Chinese imports. So like under $800. So this would, of course, somehow give a leeway for China. And um, yeah, so despite of all those retaliations from China, still the US is still open with talks with, of course, its counterpart, the Chinese country. So with all that, what we're seeing, developments in the market, we're seeing that the markets are actually easing right now. But before I forget, actually we had a positive, just to show you the positive print that we had last week with non-farm payrolls. So you can go to finlogics.com to see um, the NFP print last week. So we had a positive print like 177K, higher than the forecast. So despite um, the inflation is kind of sticky. The inflation is not doing very well. Still, the labor markets are um, maybe being stable in strength. So this pushed the dollar to a well, I'm seeing this just a um, temporary bounce from this level. So if we're gonna look at the 4 hour time frame right now, we have seen this candle. So this was actually right after the NFP, or maybe this is during the NFP. Yeah, actually right after NFP. This is the NFP candle, and after releasing the print, it went to the upside. But I'm not saying that yes, we had a positive print with NFP. I'm not saying that um, the dollar has already recovered from its continued downside since January 2025. So still, it's not looking good with the dollar. So right now, what we're gonna look at is potential reaction levels. But of course, our premise for this week is the FOMC. So I apologize for the drawing. It's not like the dollar. It's not looking good. So since we're expecting a rate pause this week on Thursday, actually a rate pause um, is not good for the currency if the premise is we're looking for a higher interest rates. But if the premise is in the coming months, we're expecting a rate cut. On the other side of things, a rate pause is kind of good for the US dollar since a rate cut is being delayed. So there is still enough time for investors or for traders or even institutions to maximize the interest rates before it it cuts maybe on July. We don't know, but looking at the CME Fed Watch tool, we're looking at a 64%, maybe actually 54.9% of a um, rate cut on July. So as we go near that month on July, we might see further development how the rates are or the percentage are going in CME Fed Watch tool. So for scenarios, what I'm looking at this week is if this fair value gap or the volume imbalance holds and price we won't see price to trade to and through this level, maybe meaning we're looking for a respect on that level, we might see a push on the upside until we reach this level. Another thing, that's for the bullish side, but on the bearish side, if we manage to respect this level, we might see further downside until this level or until we reach the 97.685 level. But what I don't like about this bearish scenario is if the premise of this fair value gap is we're looking for more downside, the fact that price or the dollar went back again at this level, I'm seeing that this level is getting invalidated because the the, the original purpose of this fair value gap is it going to the downside. So if that is the case, that the price is potentially or will potentially invalidate that fair value gap, we might see dollar pushing to the upside. So that's what I'm seeing. But of course, as I have said earlier, take everything with a grain of salt. And I highly suggest that you watch how the markets are reacting at these levels. So if I'm gonna approach it in a day trading perspective, um, I'd like, of course, if I'm gonna go bearish, I'd like this level to be taken out. But if I'm gonna go on a bullish stance, I'd like this level to be taken out as well. So right now, if we're gonna look at the 1 hour time frame, we are actually inside a range. So this is what we call a crossfire zone. What I mean by crossfire zone, if you're in a battlefield, you don't want to be caught up in the middle of the battle, of course, because the bullets are flying everywhere, and that's the most I don't know how to call it, but that's the most dangerous place that you'd be in. So for now, our approach is let's wait what the dollar will do in this resistance level or in the support level. But looking at the FOMC or the Fed rates incoming this Thursday, if the premise is the pause would give us or the investors time to maximize the 4.5% rates, this would maybe make a final push um, for the dollar. Then on July, if the impending rate cut is already a threat to investors, we might see the dollar to continue on the downside. But again, as I have said, everything that I'm gonna say, take everything with a grain of salt. These are just potential scenarios of what will happen in the markets. So, as I have said, check out what will happen on those levels. Mark out your key levels, your higher time frame levels, and make sure to look for confirmations on the lower time frames before looking for a trade opportunity. The reason for that is we would like to minimize the risk that we have on the table, and at the same time we might catch another opportunity against our original bias. So if ever that price reaches, we can go to the lower time frame and look for confirmation if it is willing to go again for a breakout. But if not, spot an opportunity for a reversal or a downside move, you can actually take that. But again, if this one fails, I'm not saying it will go all the way to the downside. It might still create a bullish upside after going on a downside, then pushes up. So as traders, our role or our job is to respond what the market is currently showing us. So let's look at other pairs. What we're gonna expect this coming week. So opening up my MT5 or ACY's MT5. So looking at the Australian dollar right now, actually the breaking news that we have with Aussie right now is the elections. So apparently we have a landslide vote or landslide win for Anthony Albanese. So with I'm not really good with politics in terms of how it would affect um, immediately the currencies it's related to. But if we're gonna see that the Australian or Albanese would continue to deliver a continuity or a positive momentum on what's happening on Australia, or a trade momentum on Australia, we might see further upside with the Aussie. So um, the renewed mandate reduces political uncertainty and supports risk sentiment around Australian assets after the election certainty of Anthony Albanese. So actually, um, Anthony Albanese is giving a good side or a positive note on the Aussie right now. But of course, um, uh, despite Anthony Albanese winning the elections, again, we'd like to see how the markets are reacting if this would still go on a bullish side. But right now, what we're seeing on the Australian dollar, the market is actually reacting positively with the Australian dollar. But let me just check the our trading view because I think the Australian dollar is not moving. Yeah, right now this is what we're seeing with trading view, but let me just double check. Yeah, it's almost the same. Yep. So far, what we're seeing with the Australian dollar, we're looking for strength, and this also the U.S. and China trade developments are also contributing to Aussie strength right now. So let me just mark out our levels. So right now we're breaking out of this range. We already forecasted this. So let me just pull up my previous analysis on on Australian dollar. So if you're gonna check out the market analysis last week, this one. So this is the title. You can just search it in our ACY.com. So we already laid out potential levels that we're looking for a bullish momentum. But what we're seeing right now is Australian dollar already broke out of the 0.644 level. So based on what we're seeing in the charts, it's doing what we have forecasted. But I'm not saying that everything that we have forecasted is a magic, but it's just that the technicals are showing us that it's willing to go to the upside. So right now, if we're gonna break out of the 648 level or the 0.0648 level, we might see a further push to the upside for the Australian dollar. And what's good about this also, if you're gonna look at the VIX, if you're gonna look at the VIX, this also tells us that the volatility or the fears in the market are slowly dissipating, which makes or allows a risk on environment to be in play. So if there is a risk on environment evident in the market, of course, risk on assets or risk assets would actually benefit from this move. So though the VIX is mostly related to US stocks, but looking at VIX, the fears in the market are slowly disappearing, which allows the risk assets like the Australian dollar to go to the upside. So right now, what we're looking or forward for Australian dollar is a break of another high of the 0.6, and we might see a further push to the upside. The same is true with New Zealand dollar. And right now, we're seeing with New Zealand dollar is we're looking for more potential momentum to the upside. So looking at the New Zealand dollar, we are also above the moving averages, suggesting that we are on a continued uptrend for this one. But of course, we still want a breakout of this range. So if price breaks out of, let me just check the level of the 603 level. So I usually use a whole number. This is my psychological numbers or psych levels. So I'd like to see a push up if price breaks out of the 603 level. So that's it with the Australian dollar and New Zealand dollar. And looking at the euro, actually before that, I'd like to look at yen. So right now, USDJPY also picking up steam. There are just two scenarios. Either we respect that level or we invalidate that level going on a more downside move. So going back to euro and GBP. So right now euro is also holding its ground, and we could actually extend this range up to this high. But formerly, prior to this move down here, euro actually tried to break out, but it failed. So the expectation, if this indeed is a weakness, we'd like to see a further downside. But right now, the euro is holding its ground at this level, and we could extend it until up to this high. If indeed the euro is still picking up steam or just gaining its strength, we'd like to see a breakout at this level, at the 1.157 level. So right now, we don't know. We might see a reaction on the London session or later today. But the real catalyst for this is the Fed rate decision that will be coming on Thursday. So let me just double check any news that we have this coming week for euro. So for euro this week, actually we don't have any red folders. Yeah, I actually don't on these folders, the low and the medium. So I only trade based on what the red folders are showing me. So right now, we don't have any significant news. Of course, we have the FOMC for the USD. So right now, what we're looking at with euro, if we're looking for a bullish stance, we'd like to see a breakout of that range. But if not, and dollar continues to dominate the majors, we'd like to see a breakdown of this level and an invalidation of this fair value gap resting at this level. So this is for the daily, but right now the euro is actually slow. Looking at pound, um, right now pound is doing the same momentum with euro. So we're still in a sideways motion with pound, and maybe let's wait for potential um, reaction at this support level. If we see a positive reaction by waiting for a breakout on the lower time frames. But as of now, we're lacking momentum, and that's given since it's still early in the morning. It's still early this week. So we'd like to see um, a catalyst for this week. And I think the catalyst for this week is the monetary policy. So sorry about this, um, beams. So the monetary policy that will be coming this, let me just pull up the red folder for pound. Yep, it's just loading. Yeah, this one. So the BOE rate decision this coming week. So we're looking at a rate cut for the pound this coming Thursday at 7 a.m. New York time. So looking at the BOE rate decision, um, if this is a rate cut, this would not look good for the US, I mean the British pound. So if indeed this is a bearish outlook for the pound, we'd like to see a further downside in favor of the US dollar for the pound. But right now, we're not seeing any strength for the pound. So let's check USD CAD, what's happening in the uh, Canadian market. So right now, we're still in a bearish stance against the US dollar. And looking at this move, we might see the Canadian dollar probably reaching at this level. So maybe the catalyst that we're looking for or waiting for this coming week is the Fed rate decision. So if indeed the Fed pause would not bring any positive news for the dollar, we might see a side for the Canadian dollar. So actually for the past few weeks to um, mount up as we expect or look forward for more rate cuts for the US dollar. So at the same time, the Swiss, um, I'm already expecting this to go to a more downside move since the dollar is also not looking very attractive as of now. So let's check out gold. What's happening with gold? So looking at gold, we're still moving on a continued pullback. For me, despite gold losing traction at this level and breaking down at this level, um, I'd like to see a support level at this fair value gap or at this level. But um, I'd like to see a reaction. Well, that's my preference. Based on confluences that we are seeing right now, I don't like the gold to trade until this level. So I'd like to see a bounce. Let me just draw some a reaction at this level for the reason that we have a fair value gap here. We also have a previous resistance that is now a support after the role has been reversed. So basically, if a role has been invalidated like this one, supposedly the original role of this level is to resist, but price broke out. We have what we call the role reversal. Then this then acts as a support level. We have a previous resistance turn support. We also have a fair value gap, and at the same time, we might see a reaction at this 50-day moving average. Actually, if you're gonna pull up the the Fibonacci tool, Let me just change the color for you. This is also a good bounce level, the 618 until the 79 level. So let's just open this, create the 79 level for this. This is I actually call this a dip discount level. So if price tries to push through, we might see a reaction at this level. But I don't want, of course, to for price to go that deeper. But of course, this is just my analysis. At the end of the day, at the end of the day, we'd like to see a confirmation that it is willing to bounce. So that's it for gold. And let's look at US indices. So as I have mentioned earlier, we're using VIX as a guideline if price or the US markets are still on a fear environment, or are they or the fears are dissipating. So looking at the VIX again, it's slowly slowing down. We're now reaching 25 to 20 levels, but we don't know what will happen in the coming days, especially what's happening with what we're gonna expect with FOMC or the Fed rate. Um, if indeed uh, the Fed or the Fed rate decision would push for a confidence in the market, we might see a further upside with the US market. And of course, a further downside with the VIX. So looking at VIX, looking at NASDAQ. So I'm looking for more upside for this one. Um, Actually, prior to that, we already reacted um, at this low. I mean, at this fair value gap on the daily after touching that level. So I'd like to see more upside for this one. And of course, a lower interest rate or rate pause would actually benefit the US market, since it would allow um, companies or big companies to borrow with lesser rates. So if we see respect at this fair value gap, and this fair value gap still holds, we might see upside with the US indices. And actually, if we're gonna look at the previous price action, it's been trending to the upside nicely, and we have not seen any signs of strong bearish momentum or signs of reversal. So as of now, I'd like to see further upside with um, Nasdaq until we reach this level. The same is true with Dow Jones. So right now we already shifted from a bearish stance after breaking out of this level. Yeah, though that is just a technical standpoint, but this could change for what will happen in the tariffs, what will happen in the Fed rate decision, and so much more. But right now, if we're gonna base everything on a technical standpoint, we are actually shifting from a sideways motion to a potential start of a new trend with Dow Jones. So as long as we hold this level, the 409 level, and we don't trade below that, we might see further upside with Dow Jones. This is also the same with S&P 500, which is highly correlated with Nasdaq. As long as we stay above this breakout level or this high, we might see further upside coming in the coming days. So, what do I suggest for this coming week? Um, lessen your risk. Wait for the FOMC or the Fed rate decision, though it's already priced in. But would like to keep the risks low since the Fed rates actually give us a kick in the market. And at the same time, whenever price arrives at a key level, so let's go to gold. Yeah. So whenever price goes to a certain key level, whether it's a fair value gap, previous resistance now turning support, I highly suggest to look for confirmation first that it's willing to go to a certain direction. Do not just trade it blindly. The reason for that is it would lessen your risk, and at the same time it would increase your R multiple as you enter in the markets, because we don't want to um, execute at this level, then our stops are just placed at this level, then our take profits is placed at this level. It's not it will not good with your look good with your stats. And well, I don't know how what your trading objective is or your risk tolerance, but if you want to have a robust data, consistent data, it's best to um, wait for confirmation and validation and have a good risk reward ratio with a minimum of maybe times 2 target. So that's it for our weekly outlook for this week. And just stay tuned in the markets. And I highly suggest that you observe the price action and wait for confirmation. So do not trade the charts blindly. Always wait for price to validate its intent. So actually, that's it for me for today. And I'd like to thank everyone who watched this video. I highly suggest that